Right then, let's get back to it. Tuesday, 10th of March, gonna go over today's move. I didn't trade on Monday and also gonna continue off from where my last video was. So, just as a recap for myself, implementing these new trading rules, only gonna do the opening range break and retest on Wednesdays, and the previous daily low, previous daily high model works best Tuesday, Thursday, Friday, and plays out more on the NASDAQ just because I have more data for it on the NASDAQ. So, yeah, I want to space my losses out over a month rather than a day. So, I want to reduce my number of trades. And also noting that on a losing streak, the money turns to numbers and the numbers turns to gambling. So, hopefully, by reducing number of trades, we can improve my profit and yeah, just my mindset in general and just sort this out. So, how I'm doing that is obviously by implementing the previous daily low, previous daily high model, um, which is something that has worked for me in the past. And yeah, so we're going to go over today's moves. To start off, we had no red folder news today. There was also little bits popping in around the war. Um, but yeah, pretty much my idea from yesterday, I had a quick scope from yesterday, and I was thinking, if Monday goes up, then we could possibly look for a reversal going into Tuesday, or Tuesday putting in the high of the week. But also knowing we got this higher time frame point of interest up here on a 4 hour, could just be the case that we end up pushing up there, sweep this high, and then start a move down. And yeah, so we'll just see. And in terms of what I was looking at today, if we go into my notes, price created a 1 hour inverse fair value gap, breaker structure below the previous daily high before the New York AM. Currently waiting for a 15-minute fair value gap below the breaker structure to form. No red folder news today. Short looking okay at the moment. However, I want to wait for the 9 a.m. print to confirm the breaker structure on the higher time frame rather than just a pullback. And what I mean by rather than just a pullback is exactly what has happened here. You can see we got very bullish price action. We trade above the previous daily high, inversed it, and at the time I wrote that, the body of this candle was currently sitting like below this fair value gap here. And yeah, I just wanted to see that come down a bit more and just close below this level to confirm a bearish bias. And pretty much we just didn't get that today, so I didn't take the trade, and it's as simple as that. Now, in terms of things I was looking for from that, I was looking for well, basically, we just had the opening criteria for this model, the previous daily high, previous daily low, and we just didn't get all the confluences that we needed to take an entry. So, yeah, like I say, price it closed below this level on the 30-minute. That's why I marked it out initially, and then I was waiting for this candle here to just come lower, but we got a reversal. And then from there, like around just coming up to the New York Open, I was kind of watching to see these candles, how they, like, if they respected the inverse fair value gap. Because if price came back up here and then broke down again, rather unlike this, then we could be on for a move. But again, I would still need more confirmation, a bit lower down, to be bearish, basically. And yeah, one of the things that was a bit of a giveaway as to why this might not play out was purely the amount that the Nasdaq moved up yesterday. As you can see, it moved from 23,975 up to 25,000. So it's like 1,000 points that it moved on Monday. So for us to try and target that whole 1,000 points for like a 7-to-1 risk to reward or something, or whatever it was, it's a bit more unlikely, especially since we haven't actually traded up into a higher time frame point of interest. Perhaps if the reaction off this weekly opening gap was a little more bearish, you know, we trade down and then continue downwards off of that gap, then maybe we could consider it. But otherwise, you know, I'm just looking for this zone to get taken now for this model. I'll be looking for the break and retest tomorrow, being Wednesday, um, just to see what we can get. And if anything happens, it happens. If it doesn't, it doesn't. Whoops, well, I don't know. But yeah, ultimately, I think I'm gonna have to wait for this zone to get hit on the 4 hour, at least tapped and then retested, and then a reaction off that retest to use the previous daily high, previous daily low model. Yeah, as you can see, it's very dicey on the daily chart and has been since like what? Pretty much since like January. Um, so yeah, on the S&P, I had a look. I had a look at the break and retest just to see, but you know, obviously with no intention of trading it today. If we look at the 8 o'clock candle, I think it was like 20 points. So, you know, no reason for me to be looking for a trade here. 6,785 to 6,765. Yeah, so 20 point range there, not touching it. So, you know, in a way, it's nice to see some more caution being used and actual reasoning for the caution. Otherwise, you know, if I was looking at Tuesday to Thursdays for the break and retest, then today I would have been stopped out. But yeah, overall, you can just see price respects this 1 hour fair value gap under the London low, comes back up, doesn't quite sweep, I don't think. Yes, we get the SMT on the SMP, um, whereas this holds a bit more. Price just moves up from there. So yeah, that's pretty much it for today. In terms of news for tomorrow, let's have a look. CPI tomorrow, 12:30. Also noting that daylight savings has happened now. So instead of the 9:30 open being at 2:30 p.m. UK, it's now 1:30 p.m., which is quite nice. So I can kind of trade the start of the session on my lunch. It just makes it a bit less stressful because, you know, I've got time to do it. I'm not trying to balance work at the same time, which is good. So we take that. And yeah, main thing to look at is for this 9 a.m. candle print, 18 minutes to confirm the breaker structure. If not there, no trade. 9 a.m. print invalidated. Watching to see if price respects the inverse fair value gap before abandoning the trade idea. Price traded up above the inverse fair value gap at 9:30. Not seeing any opportunity here in line with either model. Done for the day by 9:38. And today I did actually get off the charts at that time. So that is improvement for me. I'm happy with that. Followed my rules today. And yeah, bit of CPI tomorrow. We'll see what's going on. And any news for Thursday? Just double check, see what else there would be. Thursday, unemployment claims, and then Friday, I'm not touching it. No thanks. Yeah, that's pretty much it for me today, and I'll catch you tomorrow. Trade safe, trade smart, and trade your plan.